Let's see here. Alrighty. So candlesticks, right? One of the most important things to being able to have sound technical analysis whenever we're looking at these charts on underlying securities. So the point that I wanted to bring up, and I'm going to go ahead and bring this to everyone's attention, kind of just small thing. I actually don't have any real examples or real charts pulled up. So we're going to be relying solely on the presentation for tonight. Generally, I'll do real-time examples, but for tonight, we're going to just do a PowerPoint and see how this goes. Hopefully everyone can get some good takeaways from this. This is going to be a really good one. So let's jump right into it, right? So I want to go ahead and kind of point out what I'm going to be covering this month. I actually do have a set amount of set courses in line that I'm going to start covering this month. So obviously tonight we're going to be covering candlesticks, understanding candlesticks, how to analyze them, reversal patterns, how to apply them to your trades even. And then our next class, which I think will be this week, should be this week. This week's going to be a bit of a busy week for me. Will be indicators, should be on Wednesday, but I'll let you know if anything changes. We'll be talking about indicators, how to set up those indicators and using those indicators. Personally, I don't really use that many indicators, but it's all about preference. I do use indicators occasionally. I'll typically throw one or two on just to verify that, or just to verify the validity of a trade and things like that. Generally small factors, I'll throw an indicator on. The only indicator that I set up and keep on is like moving averages and volume, of course. Those are my main ones, right? And then our next one of my favorites, one of my favorites, patterns. Being able to identify patterns and trends and technical analysis is definitely really important. Goes right along with indicators, candlesticks, everything. You got to be able to know it, right? And then sector analysis. Okay, this one's actually going to be an interesting one. We're going to be going over analyzing different sectors and the price action of those sectors. Sometimes it's good to be able to analyze different sectors and determine which sectors you want to play for the week, right? And that also goes fundamentally, so there's some fundamental analysis that you want to look into. Say tech sector's got something going on, so you'll probably want to play tech or infrastructure, a lot of those things, right? So yeah, with that being said, let's go ahead and jump right into today's lecture, right? So there's some remarks that I want to go ahead and say. You'll see me post things like this. There's a lot of craziness going on here, right? These are a lot of levels. These are a lot of my determined levels. And you'll notice, you'll look kind of closely and you'll see that price action likes to play off of these levels. These are levels that I determine during pre-market every morning. And these are levels that I'm looking to play off of, a push below, above, things like that. Now, I don't expect everyone in here and everyone that will be watching to understand what all of this craziness means, so we'll kind of tone the noise down a little bit. And we'll eliminate a lot of that. We're looking at the candlesticks here. We're looking at the price action, right? Very simple. We got to dumb it down a little bit. And I have a few other lectures of determining levels. And I will go in more depth into those in another lecture in the future. Because there are some things that I definitely want to cover that I didn't cover as well in my previous lectures. But as of now, we're going to be covering these. Just looking at candlesticks and a little bit of basics, a little bit of advanced stuff, kind of a mix, kind of good in between. I really like this lecture and I'm really looking forward to this one. So yeah, so we're looking at this, a lot more simple chart, right? So, candlestick history, right? This isn't really important, but, at the end of the day, it is something kind of interesting to know, right? The history behind candlesticks is that it was invented by, I don't know how to pronounce his name, Munisha Homa. I'm butchering his name, but in the 18th century, he is a rice merchant, I believe. And he invented the candlestick, and it was introduced into the Western world by Steve Nyson, I believe, in his Japanese candlestick book, which was published in 2001. And that's crazy to believe that candlestick charts were invented back in the 18th century. And if you look it up, even day trading was around in the 1800s, in a lot different form, of course. But it's crazy to me. I think it's really interesting. And so, the meaning behind candlesticks is also referred to as a Japanese candlestick chart. It's a style of financial chart to describe price movement of a security, right? Each of these candlesticks is price action. It's short term. It's a price action over a period of time, depending on the time frame you're looking at. We're looking at different periods of time of price movement within these candles. It's a lot more complex, you could say, than a simple line chart, right? But yeah, so let's go ahead and cover bearish versus bullish, right? Pretty basic stuff, like I said, we'll be getting into a little more advanced stuff as we progress. But right off the bat, what is bearish and what is bullish? Okay. Bullish is whenever you're analyzing an underlying security. Bullish essentially is characterized by the rising value of shares, stock price. The underlying security that you're looking at, a bullish movement means that the price is essentially rising in value, right? And bearish is the opposite. Whenever you're analyzing that security, bearish momentum is essentially characterized by the value of the shares declining in value, right? And, most people generally already know bearish versus bullish, but for anyone new that will be reflecting on this lecture later, I think this is really important for people to know, especially those that are just getting started. You got to know what bullish and bearish means. You can look on short-term time frames and literally just call one green candlestick a bullish candlestick and a red candlestick a bearish candlestick, because at the end of the day, that is the bare bones meaning. That is really all it is, down to it. Red and green, essentially, right? That's how I like to look at it. So the anatomy of candlesticks, right? A lot of the time we look at these candlesticks on a candlestick chart, and there's a lot of noise going on. There's a lot of weird things to look at, right? So right here we have the body of these candlesticks. We have these bodies, and then we have these wicks, okay? And for a green candlestick, we're seeing buyers open it here and close it up here. And what will happen is buyers will try to take it up here, but sellers will step in and bring it down here. And this is where it'll close within a certain time frame. And then same thing goes for over here, it's opposite direction. It'll open up here and close down here. Sellers will try to bring it down here. Buyers will bring it up. And that's why you'll see wicks, is because of buyers or sellers picking it up from those extreme, I call them extreme values, but that's kind of a harsh word. But these higher values that buyers or sellers cannot keep them at, right? So that's pretty much, the basic anatomy, really. We have this body, and then we have these wicks. And whenever I like to look at these wicks, a lot of the time, these candles are telling me a story. They're telling you what's going on. We see that buyers are picking it up from this low, and sellers are bringing it down from this high. Same thing goes for here. We have buyers picking it up, and sellers trying to take it down here, but buyers are picking it up. Sorry, flip that a little bit. But yeah, that's essentially the bare bones basics of what a candlestick is. We have the body, we have the wicks, and these wicks are like the upper extreme values where the buyers or sellers cannot hold the price at and keep it closed at. So, as we see here right off the back, we got some pretty solid examples. Okay. So we're looking at some bearish examples of candlesticks. Okay. So we have the most bearish candlestick, right? Most bearish candlestick means that sellers were able to open down here and close down here and hold it. Buyers are nowhere in sight. There's no buyers able to take this up. This is the strongest bearish body you'll see. And then this is also more bearish because it's an inverted hammer, or a shooting star, actually. This is what this is referred to a lot as, is a shooting star, right? And that's also kind of subjective. So we'll look more into that in a little bit. But here we can see that this is second most bearish because buyers tried to take it up here, but sellers beat it down. You'll hear this there's a lot of different names for these candlesticks. One of my favorites is called graveyard or gravestone or something like that. I think Peter in my Discord will refer to it as that a lot. And that is one of my favorite names for it, because buyers try to take it up here and sellers beat it down and closed it right here. This is a normal bearish. We see that it's buyers tried to take it up and sellers tried to take it down, and they kind of just kept a strong body and some weak wicks. And that's a tongue twister. Try to say that 10 times fast. So these wicks are fairly weak. Just a normal bearish candlestick. Could show some signs of continuing down, right? Then you have neutral. This is where there's a weak body, a really weak bearish body. It's red close, so there's sellers present. But buyers really tried to take it up here. Sellers tried to take it down here, and buyers were able to keep it up in this area, and sellers couldn't bring it down. Pretty neutral. A lot of the time you hear this referred to as a doji. And like I said, we'll be getting into these in a little bit. And then here, least bearish. It's because sellers tried to bring it down here, but buyers stepped in. They didn't want it to go down there. They didn't want to go down there, so they bought it up to here. And sometimes we could see a green candlestick proceeding after this because buyers seem to be stepping in here, right? And candlestick analysis is key for understanding what's happening in price action. You can tell if buyers are stepping in or not based on the candlestick movement, right? And understanding candlestick movement can essentially step up your trading game, I would say. If you're going from, beginner to novice or intermediate, being able to read candles and understand that buyers could be stepping in or sellers could be stepping in is definitely key for understanding trades, having a trade plan, so on and so forth, right? And then same thing goes for bullish. We have some bullish examples. Most bullish. You really won't see this example on bearish or bullish very often because for every buyer, there's a seller. So this means that buyers have to be really strong. So they have to be able to open it down here and close it up here, like 100% buyers. And then right here, we see second most bullish, right? And obviously, the reason for this being the second most bullish is because sellers tried to take it down here, but buyers were not having it. So they brought it up here and it closed green, right? Closed green because buyers are present. Buyers are the ones that are stepping in here. Buyers stepped in and closed it up here. This is what you'll see most common whenever you're analyzing a chart is these normal bullish candles. I say most common, you'll see all of these, but these are a lot more common because you'll see wicks almost 90% of the time. It's really hard to see these. Even if you find God, what's the term? Even if you see some sort of like really good rumor catalyst or anything like that would guarantee sellers or buyers, generally you won't see these, but they are present and they do come around. I see you have your hand raised. Go ahead.
On these candle patterns that you're going over or styles, does it matter if you're on the regular candles or Hakanashi? Because I know sometimes when you go between the two, they change colors. It can be green on one and red. So is the wicks and all that, is it still saying the same thing as far as buyers and sellers?
So I don't rely on Hakanashi personally. I know Gabriel does. And it's a really great way to help with emotions, right? But to essentially answer your question, I have noticed that Hakanashi charts do show different wicks. They do show slightly different information, right? Realistically, what you're seeing with Hakanashi is it eliminates a lot of the noise that you'll get from a normal candlestick chart, because what Hakanashi is doing is it's analyzing the trading volume. And if there's buyers in the volume, if there's more buyers in the volume, the candle's going to stay green. And same goes if there's more sellers in the candle in the volume, then the candle's going to be red. Whereas with these candles, you're going to see sellers and buyers stepping in, and it's going to go red a lot more frequently. And I can't really give you a straightforward answer on why the candlesticks will appear differently. Just my only theory is the way that Hakanashi works is it's essentially combining volume analysis with candlesticks to kind of eliminate a lot of the buyer and seller noise that you'll see coming from the candle movement.
Okay.
So yes, the wicks are always going to stay the same, of course, with Hakanashi charts. So if you see a wick on a Hakanashi candle, depending on upside or downside. It means the buyers or sellers have stepped in those areas.
Okay.
But yeah, like I said, I have messed with both, and I have noticed that sometimes the wicks will appear differently, but at the end of the day, those wicks still mean the same thing, right?
They still mean the same. Okay.
Yes,
Okay.
ma'am.
Thank
Yes,
you.
absolutely. So the first candlestick pattern analysis that I want to get into is reversal candles. And these are great for identifying if you want to go long or short, as identifying a reversal and a trend. So trend analysis is very important here. Okay, you have to be able to identify if it's a downtrend or uptrend. And these candles can tell you if a reversal is probable, right? It could happen. A reversal could happen based off of these candlestick patterns or candlesticks. And these are really good because if you can identify if we're about to see a reversal, then you might want to go long or short, depending on if it's a reversal on a downtrend or reversal on an uptrend, right? So, what is a reversal exactly? Well, I kind of mentioned this, but essentially a reversal is the trend essentially reversing. It's a downtrend reversing to an uptrend, or uptrend reversing to a downtrend, right? So, oops. All right. So one of the big important ones, this is one of the most popular and well-known reversal patterns, is engulfing patterns. Okay. Bearish engulfing and bullish engulfing. Okay. And essentially how I like to refer to bullish or bearish engulfings is essentially the price engulfed the last candle. If it's a bearish engulfing, essentially the candle engulfed this previous candle. Same thing down here. Bullish engulfing. This big candle pretty much engulfed it, right? Huge. It took it over essentially. And like I said, I don't have any examples to pull up and kind of further demonstrate on, so we're kind of just having to rely on these. I do actually have some pictures, next slide, of some examples. But yeah, the most simple way I like to put it is literally just the next candle engulfed the previous candle right here. So it's this candle is inside of this one. It engulfed this candle, right? So, we see here, a lot of the time we'll see this candle and then bearish engulfing. It ate it up, right? This candle is inside of this one and absolutely reversed. Went from an uptrend to a downtrend. We can see this here. And that's a pretty strong push to the downside. We do see this bounce, but reverse to a downtrend overall, right? Oh, I don't have a bullish engulfing example. I'm so sorry. Essentially, bullish engulfing. Wow, my bad. Sorry, guys. Let me see if I can. Oh, it's all right. Essentially, at the end of the day, imagine this being flipped almost. Sorry about that. That's ridiculous. I thought I had a good example here. Sorry about that. But yeah, no, essentially a bullish engulfing would be the exact opposite here. This would be a downtrend instead of an uptrend. Sorry, I couldn't visualize that for y'all. Let's go ahead and move on to the next reversal pattern, right? Hammer and Hanging Man. These are really popular. You hear these a lot. And actually, we don't have green or red here, but this is also same exact thing. Just, colors are different, black and white, which is actually a common chart that I've seen people use. Hammer and Hanging Man, right? A lot of the time, if we're looking at a downtrend and we see a hammer at the bottom of a downtrend, it could signal that buyers are going to step in and kind of reverse the trend and start buying up, right? Because what we see is sellers took the price down here, and I talked about this briefly earlier. Sellers took the price down here, and buyers stepped in, brought it up to here, and closed it. And this bottom line would be the open price. Okay, sellers tried to take it down here, but buyers bought it up and closed it right here. And we can confidently assume that buyers could step in. Okay, we see a downtrend, hammer, and they start to step in. Hanging Man, right? Now they both look the same, right? They both look the same, except this one's at the top of an uptrend. Okay, so buyers are strong in this uptrend, of course, but we do have this area where sellers kind of stepped in a little bit, but buyers still managed to keep it up here. And a lot of the time, we'll see a hanging man on an uptrend and price will reverse, or even flag out on a kind of form a bullish flag pattern. But sometimes if this candlestick closes red, it'll be referred to as a hanging man. Hanging man. And essentially we could see buyers kind of, or sellers step in from an uptrend, sellers step in and bring the price down a little bit. A lot of the time I'll just refer to this as a flag, right? Because we do see this good strong push. And if this were on a different time frame, obviously we're not looking at time frames here, but different time frame, this could be referred to as a flag, but that's not what we're looking at. Okay, we're not looking at patterns, we're looking at candlesticks. Okay, hanging man's, if we see it close red, it could signal that sellers could step in and bring it down a little bit. Could reverse it to a complete downtrend, or it could be a short-term pullback, right? And I even noted here, obviously, whenever we're analyzing candlesticks, it is crucial. I mentioned this earlier, it's very, very important. I cannot stress the importance to identify trends. If it's an uptrend, we could see a reversal. If it's in the downtrend, we could see a reversal to the upside. And for these, I did say if this closes red, but this is kind of subjective. These two are kind of subjective. We could see a red candlestick here and we could see a green candlestick here. It is kind of a subjective. These can be kind of red or green. Just depends on the situation. And yeah, so I think that's about essentially what we're dealing with whenever we're looking at hammer or hanging man. Sometimes I'll refer to candlesticks as hammers and hanging mans. I know there's a few different names for this right here. I've heard it get called like pin or something weird. Not my favorite name, but a weird name nonetheless. Something like pin or thumbtack or something kind of silly. But I like to refer to these as hammer and hanging man, right? And next, okay, I had briefly mentioned this whenever I was looking over those examples at the beginning, is inverse hammer and shooting star. Okay, we have the inverse hammer and we have the shooting star. And so what we're seeing here is this downtrend, and you'll notice it's kind of similar to what we were just looking at. It's a downtrend and a hammer, inverse hammer. Buyers could step in. Okay. A lot of time we'll see it close green because buyers are still present in here and they're trying to buy it up. So we could see buyers step in off of this downtrend. And then same thing goes for a shooting star. We have this uptrend and sellers stepped in and they're present. So they're going to step in and probably reverse the trend or cause a small pullback off of resistance, right? We see, just judging off of these candlesticks, that's what I like to look at whenever I'm doing a lot of my candlestick analysis, is what the buyers or sellers are doing based off of these candlesticks, because candles are telling you a story. It is telling you what's happening. We're reading a story here. We're reading if buyers or sellers are in this area. Okay. As always, trend is very important, right? Quality kind of sucks on this screenshot. Best I could find, so apologize for that, right? But morning and evening star. Okay. These will get referred to as dojis, like I had mentioned. There doesn't necessarily need to be gaps for these. And these are a lot of the time pretty neutral candles, because we see that buyers and sellers are kind of equal in this area based off of the candlesticks, right? We gotta be able to understand what these candlesticks mean, or wicks. Oh my goodness, wicks. Sorry, I'm getting ahead of myself. We have to be able to understand what these wicks mean. We have to be able to understand that buyers were in here and sellers were down here and what's going on, so I generally will judge if buyers are stepping in based off of wicks. There's good buying pressure off of a selling candle, the wick will be long, right? And so here we have a morning star, okay, neutral, and it's at the end of a downtrend. We saw this strong push, then we have this pretty indecisive candle. I'll refer to it as indecisive quite a bit. And I refer to it as indecisive because it's 50-50 here, really. It may close red and it may close green, but at the end of the day, it's pretty 50-50. Indecisive. It doesn't really know if it wants to continue down or not. And a lot of the time, if we see the strong push and we have indecisive candle, buyers could step in and start to take it up. Same thing goes down here or over here. We have this uptrend and then an indecisive candle, and then it moved to a downtrend, right? And yeah, so we have this evening star because it's indecisive. Buyers don't really want to take it up anymore. We already had the strong push. And now sellers seem to want to step in and pull it back a little bit, or bring it down to a downtrend, right? So let's see here. Now, these candles are not as important and not particularly my favorite. So I'm not going to cover over this one. And I think the next slide, I believe it's the next slide. These are not my favorite to cover, but they are good to know, right? It just kind of gives you a relative idea of how the relative strength of a trend is, because we can see that buyers are pretty strong in this area. 3 white soldiers. I probably will never, you'll probably never hear me say 3 white soldiers or 3 black crows. I know there's some guru nerd that thinks that these are super important somewhere, but that's not what we're worried about, right? So we have 3 white soldiers and 3 black crows. Okay. 3 white soldiers, buyers are pretty strong, but the candles are kind of barely closing outside of each other, almost inside candles. And they're buying up. So buyers have some good relative strength here. And then same thing goes for 3 black crows. Okay. We have sellers stepping in here, and they're barely staying outside of each other. But sellers are pretty strong. We've got some strong selling bodies and some weak wicks. Okay. Not really any long wicks or anything, just pretty bearish, pretty bullish. I will almost never refer to these as anything. And at the end of the day, they're not as important because you don't really see this as often. If sellers or buyers are strong, you'll see it kind of moving in a solid direction. This is almost like a weird consolidation almost. That's almost how I like to look at these, is buyers are kind of struggling to kind of keep it picked up. Sellers are kind of struggling to keep it bought down, but they're strong nonetheless. So yeah, like I said, I really won't talk about these, but they are present. And if you can ever identify them, all the power to you. So continuation candles. I think these are really important for those who kind of get worried about when to trim or take profits, right? Whenever you have a trading plan, you kind of want to be able to understand if the next candlestick is going to be able to give a continuation or not, right? I like to preach, if you're ever questioning whether or not you should take profits on your trades, you probably should trim nonetheless. If not take all of them. It never hurts to secure the green. But I do also like to preach that you should let your runners run and your losers always cut your losers, right? But with that being said, a lot of the time you want to be able to identify if the trend's going to continue or not, so that's why it's really important to be able to understand candles. Okay. You got to be able to identify if the trend's going to continue, if it's going to reverse, what's going to happen, So let's jump right into it. Okay. Doji. Okay. I mentioned this earlier, Doji is neutral. It's very neutral. So it can be in between being a reversal and a continuation. It's kind of subjective, a lot of the time for me, if I'm ever in a position that that's giving me a doji, I'll either trim or completely take profit. If I'm trimming, it's going to be about 90% because it's neutral. Okay. It's showing that buyers and sellers are kind of just, they don't know what the heck to do with this. They kind of just like keeping it centered, right? We do have some other examples right in here, but Doji is really the one we're talking about. We have Doji and Gravestone. That's right. There it is. Gravestone. Okay. Kind of a weird candlestick. Gravestones are pretty common. Dragonfly, same thing. I really won't ever talk about these. I'll talk about the mentioned ones earlier, but we'll see Dojis and long-legged Dojis. Okay. And these are neutral, it's 50-50. Buyers and sellers are just fighting each other. They're not really able to keep a good big body or anything. No one is. Okay. So a lot of the time, if you're in a winning position and a doji starts to form, I'd say it's a good time to trim. I say it's a pretty good confirmation to trim, take some profits, take some risk off the table, take all your profits, whatever. You definitely don't want to get caught bag holding on a doji that could completely reverse on you. Like I said, it's 50-50. It's neutral. It could go south immediately, so it's always a good idea to trim on these candles because buyers don't know if they want to continue and sellers don't know if they want to continue. Right. So yeah. Falling and rising 3. Okay. I think I have an example in the next slide. I don't remember though, but these are pretty important. Because what you can see is a lot of the time you can see this applies to bearish or bullish, right? Of course. So this pattern right here, it'd be flipped if it was bearish. And what you'll see is you'll see the strong green push or the strong red push. And then you'll see some sellers or buyers kind of step in and go take it up or down. In this case, we'll go ahead and say that this is a bullish rising 3. So we'll see the strong push. Okay, we can confidently say that buyers are present. Okay, they're present. There's not really any sort of reversal here. Just buyers kind of just took it up and let sellers kind of do their thing a little bit. These bodies are weak, so sellers are not exactly strong. Okay, so we'll see this really strong push in this area, and then sellers will kind of step in 3 candlesticks, and then buyers will come back in and take it up. And this is typically a good pattern for a continuation. So if you're ever in a position and you see this good strong push, sellers kind of bring it down a little bit, there's a good chance that we could see this happen, and vice versa for sellers, right? We flip the script here. We could see this strong push down, buyers take it up, and then strong push down again, right? So we can generally identify if sellers or buyers are in control based off of candles. That's why I try to stress being cautious about previous candles, because if we see strong sellers and buyers kind of start to pick it up, that doesn't necessarily mean that buyers have control, because judging off of the previous candles, we're seeing that sellers are pretty strong. So overall, we can pretty confidently say that sellers could be strong in an area where buyers are picking it up a little bit. So you got to be a little bit cautious about strong pushes to the upside or downside, because whenever you see buyers step in or sellers step in, depending on the strength of the previous candle, kind of determines whether or not sellers or buyers are in control in these areas. I will say this is a little bit of a short lecture, which is totally fine, short and sweet. But yeah, so rising and falling 3, we look at this and we can flip the script, and it's a falling 3, rising 3. A lot of the time we'll see these strong pushes, buyers are control, sellers kind of step in a little bit, kind of just weak sellers, not crazy. Then buyers take it back up and they continue back up, right? And vice versa for falling 3. Okay, sellers will take it down, buyers will try to pick it up, and then sellers will step back in. Okay. And yeah, so the next example I want to talk about is inside candles. Okay, these are really common, and I will refer to them a lot. My analyst I Spy will refer to them a lot. I haven't heard Gabriel talk about them, but he does. And essentially, looking at inside candles, inside days are definitely not good days to trade. I can't stress this because it's a lot of consolidation. There's no clear direction. It's within a selling candlestick or it's within a buying candlestick. You can trade inside days, but you have to be cautious. Okay, you have to be careful about these inside candles. And essentially, whenever we're looking at inside candles, we're looking at this big candle right here, and then this candle is staying inside of it, right? It's not going to the upside, it's not going to the downside. It's staying right in here, right inside of this body. I don't like this. I don't like this. These inside candles are kind of weird, kind of iffy. It's literally, as the name sounds, it's one big candle and then another candle that stays inside of it. You'll see these on shorter time frames, 5 minutes, 15 minutes, any time frame. You'll see these a lot. And a lot of the time, these will not always be identified like this, right? You can see 2 candles that are the same size, and I would kind of consider that inside, right? Because they're staying inside of the same levels. Okay, consolidation. This wouldn't necessarily be consolidation because we have these 2 major levels, and then this one stays in between, like really tightly in between those. But inside candles are always good to look at, especially on bigger time frames. Right. Yeah, inside candles are really important to take note of. I definitely think they're really important because it can signify on big time frames like dailies and weeklies if there's going to be consolidation and those sorts of things, so it's always good to take note of these things, right? So I do have an example for inside candles, right? So we have these 2 right here, these two trends, downtrend. this candle stayed inside of this body right here. It's in the side of this body, and same goes here. Two different kind of ideas, pretty subjective setups here. Okay, these aren't really setups that I'd like to get in on. Okay, these are like kind of just weird. Sellers still could have control in here, or kind of iffy, you know, kind of consolidated. It's kind of just a weird area to be in. Inside candles are always just kind of a funky one, right? So, you know, we have the strong push inside candle, seller stepped in, vice versa over here. So, you know, these are really subjective, and definitely won't show up like this all the time. This inside candles can lead to the more downside, lead to more upside, can lead to consolidation. They're kind of just a weird one to look at, right? So, you know, like I said, it's a pretty short class today. And I'm kind of happy about that. You know, I don't like people having to watch over an hour and a half of a lecture. Okay. So, you know, I definitely am happy that this one's a little bit shorter today than some of the other ones that are kind of prolonged with some unnecessarily talking and information. So I do want to go ahead and recap, summarizing it off here. And like I said, you know, today is not my watch list day, but I will be sending that out for anyone that's interested in using it. I'll be getting that typed up for y'all after this. So absolutely. Thank you. Thank you guys for tuning in, of course. So today's summary, you know, we talked about bullish and bearish candlesticks, reversal and continuation candlesticks, and applying this in real time, right? If you can identify candles, you can essentially apply it to your trades, basing it off of determined levels and determining what the trend is and determining what the candles are doing. You can apply it to your trades, right? You know, being able to understand what these candles mean, what the wicks mean, what the bodies mean. It's all very important because, you know, technical analysis, you have to be able to understand what buyers are doing, what are sellers doing, you know. I am going to be doing this format a lot more with presentations rather than some real time. I will have real time examples. Oh my goodness. I'm sorry. If you'll hear anything in the background, please ignore that. So yeah, you know, I will have real time examples next time. Busy weekend, like I said, you know, so I apologize for being a little underprepared. You know, I really wanted to get some good information out for you guys. So yeah, you know, like I said, it's crucial to be able to understand what sellers are doing, what buyers are doing, who's present, when, where, what, why, all that good stuff, you know. Buyers are present if candles are green and the volume is green. I don't know what trading software y'all use or what charting software y'all use, but volume analysis is a really good one because you can look at volume analysis and you can see that buyers are stepping in, sellers are stepping in, who's present, when, where, what, and why, right? And as always, you know, I will constantly preach that these are telling us stories. These are telling us what's happening. If you can understand what's happening in these candles, you can apply this to your trades. These candles can signal when to get in, if there's a reversal, continuation, these sorts of things. You know, it's crucial to understand these things. So yeah, I mean, good, short, sweet lecture. You know, I hope you guys were able to take something away from this. You know, really appreciate you guys for joining in. Short and sweet. Thank you guys for joining in. Yeah, this will be posted to YouTube later tonight, for anyone that wants to look back on it, or for anyone that's new and didn't get to watch it tonight. Yeah, so that wraps it up. Thank you guys for joining in.